Good morning, Daniel. This is my first time here. Damien's going to be about 10 minutes late in joining, so hopefully you're able to hear me okay. I think you may be the only one on so far. I can't see where it indicates how many people are actually on and who they are. Thank you. Are you able to see a chart now? Something really weird is happening. All right, let me unshare my screen and then reshare again. Are you able to see this chart now? Can you see this chart? Anybody? Okay, all right. This is my first time doing this. I'm a little bit nervous, and I'm probably not doing some stuff the proper way. When Damien gets on board, or Paul, I only have one screen here, so I'm flipping back and forth, but I'm not sure if that's making it harder for you guys to see. I'm getting like a screen upon screen upon screen just cascading through on here. All right, I'll just get started, and then we'll see if people have questions. I can't see when I'm sharing the screen. I'm not seeing the main screen that has any questions, so I might have to bounce back and forth. I'm probably doing something incorrectly. But I do want to get started off if everybody's able to hear me. I've been using the software bundles. I started a few years back with the Elliott Wave bundles and all the courses that are there. I'm just gonna go back to the main screen here. You are sharing and your picture is in the bottom left. Okay. I'm just going to stay here for a second just to talk. So I did start using Paul Bradby's software bundles starting probably 3 years ago with the Elliott Wave package, all the original packages. There was various releases and so forth. Went through all the training courses, looked at all the videos that came out from YouTube and other means back at that point in time, the boot camps and so forth. And that's how I really got my start in the trading, using this as my one and only trading process at this point in time. What I want to explain is, I know you've seen Mike do his live trading show. He uses, I guess, predominantly futures and so forth. I am going to explain what I do, because at this point in time, I only trade out of my IRA and my solo 401k plan in the United States, which are retirement accounts. They prevent me from trading futures and forex, cryptocurrency and so forth at this point in time. So I do have plans to move in that direction. I have, with Paul's help, and a few months ago, I was able to open up an account in Bybit, and also Binance USA. So I just have to do some funding there. I have purchased some cryptocurrencies in Cardano and Bitcoin at the moment in a Coinbase, but that's just more for wealth building at this point and not used for trading. But I will show some examples of what I'm about to explain, that it does work, what I do with the Elliott wave. I also incorporate the XSprout algo, the divergence cloud. I just recently, 2 days ago, purchased the manager, but I have that on my trading view. I predominantly trade on in TD Ameritrade via the Thinkorswim platform. So the manager is not yet available there, but I do have all the other bundles. And I predominantly do day trading, but I also do swing trading, and I will explain what I do there. So a lot of this first hour is be explaining my technique versus futures trading. And then, and the reason I say that is because I trade predominantly in stock options. So, and I'll get more into that in what my techniques are. If you're interested in following that from a trade, we might be able to see when the bell rings at 9:30 Eastern time, US, see some trades set up. But what I'd like to do first is go back and explain how I use Paul's product and education in setting up stock options. And then I will explain a little bit more prior to the stock market opening in the US. I will explain how I use Thinkorswim for the actual putting the trade on, and we'll go from there. Okay, I saw Daniel was talking about options. Options, you are correct. You could. The reason I use options is because I do day trading with it predominantly. Like I said, I do some swing trading, and I'll explain my two different techniques. You are correct. You could lose your butt on the options, but if you use the bundle properly, that should be minimized. I keep it pretty simple on the day trading side of things, and then I'm actually on the swing trading. I do become an option seller, doing vertical credit spreads and stuff like that, which I will explain during this hour if time permits. Okay, so with that said, I'm going to go over to, I predominantly trade options on 5 stocks right now. I still work full time at another company, so I don't have a ton of time to go out and scan the markets, throughout the day, due to my other job commitments. So I have narrowed down in some research, and I'll explain why. I predominantly trade Amazon. Amazon is my #1 go-to day trading options equity asset that I use. I also will trade Nvidia, Tesla, and also Piton. There'll be other ones that pop up that I will catch off a glance, but they're primarily the ones that I trade. And the reason being is that Amazon in particular they're very expensive stocks to trade. And I'm going to jump over to Thinkorswim for a second, over to the options chain. For those who haven't ever seen or don't trade options, this is in Thinkorswim, and most trading platforms look pretty similar. You'll see an options chain that looks like this. And I predominantly, now you'll see up here, here's the August, this is the date when the option would expire. I don't know what everybody's experience is in options. On day trading, will only buy calls or buy puts. A very simple trade execution. But the reason predominantly that I stick with this is because you see this bid and ask price. This is the price if for selling, and the others for if you're going to buy. A lot of stocks have a big spread, and I'll see if I think I can find one. But they have a really huge spread between the prices of their options, and so I will not trade, even if Amazon's spread is too large. I usually look for Amazon not to have a larger than a 50-cent spread between the two. For example, this one has a 45-cent spread. I'll usually look 50 to 70 or close 50 to 70 cent and closer, but I'll get more into that. But that's why I trade Amazon. I'm going to just bring up one that I think, like Google is, let's see, Shopify. So Shopify here, look at this here. You have a bid-ask spread of $6, over $6. That's not in the way I use the indicators in the Elliott Wave bundle and the other indicators in the day trading bundle. That I would never make any money on that. That spread is too wide. So that's why I've looked for stocks like Tesla, Nvidia, and Amazon, whose bid-ask price are very, very close. That way, when I put in the spread, and if everything goes well based on the graphs, I may be out. And I'll show you some of my recent trades, plus some really good trade days and stuff like that. And you'll see the time frame. I may be in and out of a trade in less than 2 minutes, sometimes less than 1 minute. And if the bid-ask price is too great, you're not going to get what you're looking for, and you're going to be stuck in there much longer than the chart and indicators would like you to be. So anyway, I will get more to this at a later point in time. I do want to let me go back and see if there's any questions. Where's the screen? Okay, nobody has any questions at this point. Oh, Damien, I see you're back on.
I'm back. I'm sorry about that.
Okay, cool. Were you able to see everything clearly there?
I was. Don't worry about jumping to this page.
Okay.
So just stick with your chart, and I'll pull out any questions you get in the chat.
Okay, cool. Okay. The other thing before I get to the charts, with Paul's help a few months ago, and I know Paul can't trade on Nadex, but I just want to bring this up real quick. I do trade on Nadex periodically, but and I was talking to Damien yesterday, just on a demo account right now as I'm trying out certain techniques. The graphing with the bundles, Elliott Wave day trading bundles, they look like they really work very well in Nadex. But that I'll save that for a later conversation, because it's definitely a different trading scheme than your normal buying and selling of calls and puts and so forth. Okay, so let me go back. When I first start off my trading day, I'll look at Amazon, for example, at the daily time frame. And the reason I do this is you'll see these magenta lines. I keep tabs on it, and it is one of Paul's steadfast things to do, is to frame up your charts properly so you can see where, looking to the left at a higher time frame, where are the support and resistance zones and so forth. So as I'm making a trade, I will flip back to the day and just get an eyeball idea of what zones I'm looking in and so forth. And for example, even though we're on a downtrend on a daily, I also look to see where the downtrend is. So we have a 5-star and a 6-star sell on the daily basis. I do know from looking to the left that we are kind of getting close here, really close to a zone where support could be tested. So I might be careful. I will be careful when I enter trades. Looking at the amount of space or air that's in between here, we have about 30, 40 points in that range. That's still sufficient for a day trade in Amazon. Part of the reason why I stick to a few stocks too is because you get really familiar with the amount of time I have, the short amount of time I have during the day for trading. It's nice to get familiar with the habits and particulars of an individual stock. So Really strongly recommend always looking to the left, putting on the framing of the support and resistance lines, and taking that into consideration as you make your trade. So that said, I look here, and it does look like we're still in a downward movement. So my next thing is I'll drop down, and I'll go down to the 12-minute time frame, is where I usually start next. Oh, let me just bring this up. I do use the TradingView platform as well, because more of the you could probably see if I expand this out, you can see that the manager is on. I did change the blue dot-ish thing to a yellow and kept the blue. I kept them on there in this color. Is more identifiable for me. Might be my vision or something like that. But I just got the manager software, and Damien set me up with everything. I think it was on Tuesday. So I will. It looks. And I'll come back here because it did. The manager did work really well. And as I mentioned to Damien, I haven't set up a trade where I did not put a stop order in, a sell order in, and so forth, which I'll explain in a little bit. But watching the manager in work, and you can also see the divergence cloud. There's a lot of this stuff works together. It looks like I will be using the manager quite frequently as I observe more of the patterns and so forth. So it looks like that's a really good, after you place your trade, even for a day trade, it looks like a really good setup. All right, so like I said, next what I typically do is, I have to find it here. That's 1 minute. Sorry about that. I have too many screens open. 3 minute. I usually have a 1 minute, 3 minute, 5 minute, and the 12 minute after I go through the day trade. Here's my 5 minute, and I use all of these higher time frames to confirm the direction, because I do place my trade based on the 1 minute time frame. I know that that sounds extremely aggressive, but if everything matches up and everything's congruent, it does pay off really well, at least for me at this point in time in trading the equities that I've chosen to trade. So I think I have a 12-minute open here somewhere. Oh, here's the 12-minute. So I will look at the 12-minute as well, see where the highs and lows are, and so forth, just to get a general idea. I keep track of the divergence cloud, watching the EMA cloud, and so forth, to see where things are laying at the time. I can't I can't say more about the false breakout indicator. It is something for those who don't use it. It's this indicator down at the bottom. It says false breakout down here, the false breakout stochastic. This yellow bar that you see here happens to be on the low side, but you can see one over here on the upside. It is extremely valuable in my trading to keep an eye on where that bar is, if it exists or not. It's a very strong indicator that in this particular case that we will continue with, even if we have a short blip upwards. Like for example, here we have a wave 1 at the 12-minute chart. Even if it goes up to form a wave 2, that existence of that yellow line there is a factor for me saying, okay, this is definitely, it's probably not going to be a very long wave 2. And if you've listened to any of Paul's boot camps and lessons on the Elliott wave, one of the observations that he has made is regarding wave 2 and wave 4. If you have a, not all the time, but I have to tell you that it's pretty darn accurate, is if you have a very simple short wave 2, your wave 4s tend to be really kind of long running and a little bit of a bumpy travel. And vice versa, if you have a long wave 2 that's going up and down, and forming before it finally forms out, the wave 4 tends to be not quite as bad, and then the wave 5 kicks in very quickly, and you can see some pretty good returns in a very short period of time. But anyway, so if you don't have the Elliott wave package yet, please get it. And like I said, it has been very valuable for me in my trade setups and so forth. So again, so from a 12-minute perspective, everything is looking good here for a downturn. Now the market's not open yet, so I have to actually wait, and I'll show you what I do right at the time that within the first 10 minutes or so that the market opens. Sometimes even a little bit before, but I'll show you what I do when I get to the 1-minute chart there. And again, read the Facebook pages because you can ask questions, and Paul responds quickly. And there's some stuff which I'll show you that Paul suggested, and that has really saved my bacon on setting up my trade strategy properly. All right. So then I'll drop from the 12-minute to the 5-minute chart. I'm looking for congruency here on all the patterns. Again, it's, you know, a wave one. Again, this was yesterday at the closing, was forming a wave, you know, still in the wave one. I have not looked at any of the futures at this point in time. I'm just strictly going on what I'm seeing here. I also use, there's two bias indicators. There's one that shows just a one line. This one here is the original one. I still use the original one. I do the bias for trade. Let me see if that's holds true. I believe. Yeah, the bias. I don't have it on this 1-day chart. Oh wait, I'm sorry, I'm not on the right chart here. Yeah, there's a bias indicator that I have that comes with TradeView. It really just shows you. Let me get back to that 5-minute chart. 3-minute. Sorry about that. Okay, I'll do it on the 1 minute. It's fine too. I do use it because it shows the past time periods that you can set up. If you go up to your studies and you look at the where is it? Down here. You can set up your different periods along here. Like your first highest one is the 1 minute, and then goes 2, 5, 15, and 30. So I do like using that in Thinkorswim. In TradingView, I just use the straight one. It shows the indicator whether it's green or red or no color at that point in time. I do like watching this. Again, I'm looking for, Paul's basically said, if you've listened to any of his course, you're looking for reasons not to make the trade. So that's kind of my mantra, is what I'm looking for, anything that breaks the congruency of what I'm seeing as I move from the higher time frames down to the lower time frame. And so far, heading into the U.S. stock market opening, everything at this point continues to remain in a bearish or downtrend at this point in time. And you can see even farther out here, I got the yellow stochastic. It's a little bit further out than I usually will play to, but at this point in time, it has been accurate that the rubber band has now snapped back, and we are now downtrending again. So again, looking for all the reasons not to trade Amazon on the down. So far, everything is looking good. Damien, if there's any questions yet? No. Okay. All right. What I do next is I've gone through the daily, I've gone through the 12, the 5, and I'm down to the 1 minute chart. What I'll do is, technically speaking, this is a low at this point, and every day I treat as a separate time, a whole brand new time. I don't run a continuous Elliott wave from previous, from all the days at the 1 minute time frame. So hypothetically, at this point, the market hasn't opened, so I don't know exactly what Amazon plans to do. But if this was the opening, I'll look at the bars and the bar count, and in Thinkorswim with the Elliott wave, if you can see, there's this yellowish or amber color here, and you can see it changing from 329, 330, and so forth. What you do is you take your cursor over and highlighted on the lowest frame at this point in time, and that's you see 39 over there, but it's really 390. So what I'll do then is go back up to the flask up here and go to my Elliott wave. Click on the gear to make changes. And right now you can see it's pretty close. It's at 386 from my yesterday's, but I'm going to just bump it up to 390. And then I'll hit OK, apply, OK, and then it's going to configure itself right now. We'll see how it opens up. I may change that, but it's still sitting at a 1, but we'll see how that changes. Usually I do it within the first 5 minutes of the market open. So at 9:30, which is about 30 minutes from now, I'll probably come back in and see how that plays out. Now, I want to go to a couple of examples. Actually, before I want to impress upon you how good this bundle works if you use the bundle and listen to all the education. I want to just impress upon you. I had a proud moment way back in March, and I know it's a long way off, but I really felt compelled to share this with you. I took 2 days off from work just to see how this would work if I wanted to quit my job and do this full time. Now, my wife, on the other hand, though impressed, wants me to continue work for insurance reasons and so forth, health insurance reasons and so forth like this. But these are the 2 days I took off, and I traded from 9:42 in the morning Eastern till about 3 o'clock in the afternoon, and likewise about the same time frame open till about 3 o'clock. I usually don't trade after 3 o'clock because if you have an options call on and you want to finish it up by that day, some of the things run long. But I do want to point out to you that in those 2 days of trading, I made 5,900 the one day and 4,100 the other day. But the more important thing, well, that's pretty important. What I want to show you is I'm just buying calls and puts, and I just want to show you that. Look at the timestamps. 9:42 and 40 seconds. Closed it out 1 minute and 2 seconds later. And if I just highlight over here, you can see down at the bottom a $540 gain in about a minute or so. And if I can keep going down these numbers here, buys and sells. Here's a 390. I think somewhere in here there was a $1,020 gain in a few minutes as well. So I was very excited about this because I know Paul has his inner circle. They have a 5K. They had a 5K club kind of going on and so forth. And I wanted to see if I could actually use his techniques and do that. And these are all live trades you can see here, and they're all 100% me using Amazon both days here. So I just sat and used the trades on a 1 minute time frame and pulled off all these trades. Now,
so you took a good profit on those two full-time days.
Yeah.
And your wife wanted more.
Yeah. Yeah, it was $9,200 in 2 days. So
she must have some really nice earrings.
Yeah. So I thought, okay, well, maybe I can. I'm 60 years old now, so maybe I can retire. But with the cost of healthcare in the U.S., it would be like $2,000 a month or something, and this is $9,200 in 2 days. So now I just want to show you something in comparison, because I don't take every day off, obviously, because of my job. But I just want to. Oh, and one thing on this March and April, there was not a single lost trade in here. It was 100% using the Elliott wave. I didn't have any losses, so it was 100% trading day across all these trades here. So I think it's pretty impressive. And I did have a span of about it's not that I haven't taken losses, but I had a span of about 3 months where I was at a 91% win rate using what you see here and so forth. So, but I do want to show, like, I'm not trading every day, but this is this week here, and I've just highlighted in green. So on Monday, there's my Nvidia trade. I made one trade. It was 8 or 10 contracts total, but you can see that I put the trade in at 10:52.44, and I was out of the trade at 10:53.52. So it's a minute and 8 seconds. I made $350. Okay, these things in the red are just miscellaneous trading fees and commissions. So on Wednesday, or I'm sorry, Tuesday, I made one trade on Amazon from 12:18, 12:22, $741. So what's that about? Maybe a little over 4 minutes. And yesterday I made a trade, and this one came out as profitable as $550. I got called away on a work meeting, and I don't normally do it and don't recommend doing it, but I put the trade on 11 o'clock, and it took about an hour and 23 minutes for me to close it off. That was something I would not recommend doing, but the trade setup was so good that I was pretty comfortable in doing it. I probably would not do it again. I don't recommend doing it, but it did. I still yielded 550. So in 3 days this week, in about a total of 2 hours of trading, $1,641. So again, I'm just doing it to impress upon you, not impress you, but impress upon you. If you use these bundles properly, you can do pretty well in a couple minutes a day, maybe up to 2 hours a day, or you could be really, really profitable, like I showed you back on those 2 days when I took off and just traded. And here this week, no losers here. 3 trades, 3 wins, 1641. So anyway, just want to take that to show you some live trades that I made this week as well. That's all the trade, and that was all the trades I made this week. There's no other ones I made, so it's just those 3, 100%, 1641. Okay. Okay, so what I would like, what time is it? 9:11. Okay, we got about 20 minutes before the bell opens here. I can't guarantee that when the bell opens that there will be any trades. I do want to talk about a couple of my rules. I don't usually trade in the first 15 minutes of the day. There's a lot of institutional and news soaking in and so forth. There's a lot of whipsawing and volatility and stuff. So I typically don't trade in the first 15 minutes of the day. I have done it, and in all honesty, the days that I have done it, I'm more of a 50-50 win rate at that point. So I've just decided to be very prescriptive in my plan, and I won't trade in that first 15 minutes. This is stocks anyway. I'm not talking about futures or anything like that, but just from an equities perspective, that's one of my rules. The other rule is I typically don't, I'm pretty much going to say I don't open up new stock option trades after 3 o'clock in the afternoon Eastern time US. As you saw from the spreadsheet that I showed you, it took an hour and 20 minutes for that one trade to be, for me to close it out. The stock market closes an hour after, so it's just too much risk for me. Again, it comes down to reasons I won't get into a trade, and I don't want to risk running into an hour only to have a trade do what it's going to do. And because of options on the day trading, I won't take them into the next day ever. And I don't know what your experience is in options, but there are these things called the Greeks. And one of the Greeks is one called theta, and that has to do with time decay. And as the option gets closer and closer to expiration, the time decay really deteriorates or degrades the price of your option. And you don't want that working against you. But I won't get too much in the details of the Greeks at this point in time. I will talk about delta in my trades, just for my trade setup. that, and I'll just give a real quick blurb on what that means. But that would be the only Greek symbol on the options thing that you'll be that I'll tell you that I use and why I do it that way. Okay, so let me go back to trying to find. Oh, here it is. Okay, so this is my 1 minute chart on Amazon, and this trade, this Elliott wave zone for wave 4. Now in TradingView, I was talking to Damien about this yesterday. You know that there was a wave 3 was created because you wouldn't get this red, yellow, green zone in here for a wave 4 pullbacks. But in TradingView, it does take out those wave counts. So you'll have to just trust me that this down at the bottom was the wave 3. So we had a wave 1 here, the wave 2 was up here, we have the wave 3 down here, and then we did hit a wave 4 at this point in time here. Okay, so what I do, and I have that manager on here now, so it might be a little. Let me see if I can find it on the. Let me go back on here. Oops. All right, that's not going to work. There is the other thing with TradingView and TOS is because of the way the data is streamed into the two different systems, you'll sometimes see wave counts create a trading zone that you won't see in TOS. So I use both to look for the trade setups. But anyway, let me see if I can make this a little more visible here. Okay. I'm not as cursor savvy as Paul is with his presentations. He does a much better job. Okay, so here I said, here's the wave 3 down here. The wave 4 was up here. The rules that I've used is, you'll see the EMA cloud. That's that magenta cloud that's running down through the center here. My rules on trade entry is I want to be, from a more conservative perspective, I use the 21-day EMA setting on the EMA cloud. You can set up to 3 different ones, but I use the just one for day trading. And then you have you can see the top of the blue and the red zones here, those bands. What I typically do is once the wave 4 is generated and all the other stuff is congruent, and you have a like you can see down here, this is the stochastics, false breakout and so forth. If everything is all set, oh, I do, and there's one other thing. There's the measurement between down here between the top, and I think I had that on there, but it's the Fibonacci retracements on here that I measure for the 90 to 140 zone. If you don't have, I won't go into those details right now. If you don't have the Elliott wave bundle, please get that and watch those boot camps, because Paul does a great job of explaining how to measure and use the tools in TradingView and Thinkorswim, etc., Ninja Trader, Motive Wave, and so forth, on how to measure the distance between the red zone here and the green. And I do check that on my TOS, my Thinkorswim platform. I do have that set up to check for that too. So if you've got this, you got that in the right zone, you got your wave 4, everything else is congruent. Now I wait for my stock to drop down. It has to go outside of the EMA and below the red in this particular case. So once it got into here is when I had my trade, which I'll bounce back over to the trade thing. I had that already set up and just waiting for it to click at 32.25.85. You can see the price was over here. So once that clicks off, then I'll execute the trade. And let me jump back over to the Now this was yesterday's trade, but this is today's option. So I was using, as I said, there's two days to expiration or expiration dates. So with day trading, I'll use, let me close this. So you can see in the parentheses, there's a number 1. That means there's 1 day left, and there's an 8. I will come in on a Monday, and I'll be using the chain that is expiring at the end of that particular week. I will only use that up through Wednesday. And the reason for that is the theta decay that I mentioned earlier kicks into high gear, and you could have a really good day or you could have a really bad day. I've learned my lesson from trading too close to the expiration date. So Monday, Tuesday, Wednesday, I will trade in the week of expiration. Then today, and if I trade on Fridays, I will drop back over to the one for next week. It'll have an 8-day today and a 7 in there tomorrow, and I'll trade those instead. The theta is still there, but it's that time decay is not nearly as hyperdrive as today. So what I would do is, like I said, I would preset. We know that I'm looking for a down market. Let me go to this one because it's easier to show here. So on a Thursday or a Friday, I will go into this next week's expiration date. There's two things in particular that I'm looking for from all of these. For those who don't know, this is just the strike price of the option that you're buying or selling down the center column here. I won't get into too much over here. Like I already talked about, making sure the bid-ask price is not too crazy. Right now, this is pretty crazy. So if it was right at this moment, I wouldn't put this trade on. But if it was a closer spread, and that should change once the market opens. If it doesn't change, then I won't trade it. But let's just pretend for right now, from this hypothetical trade situation, I'm going to look first at the delta. And on a short, that basically, there's two definitions of delta. I'm just going to get into the really short one. One that's what's the probability right now that you'll end up being at this strike level when this expires next week, and it's a 51% chance. On my day trades, when I'm using the week out expiration date, I will trade in the upper 40s to no more than a 55, but usually it's more closer to 50. I look in that range, and I'm looking for one that has a lot of open interest, because you want to be able to get in and out. If the open interest, well, you see there's 0. Well, that's NA there, so who knows what that is. But if there was like even 90 down here, that's not enough players involved at this point for me to. If that was a 50 delta and it was only 90, I wouldn't even take that trade. I look for something that's over 500, like the 1,000 here would be perfect. So if I was going to buy a put, at this point everything looked good, everything was congruent, I would simply buy a single, and then then you can choose how much you want to risk in that particular trade. I usually go anywhere from 1, depending on the price. If you have one, if you go with one contract there, that's going to be about a $5,045 risk at this point. So depending on what it is, I'll ramp up anywhere from 2 to 4 up in this range. So a 4 would be a 20,000 risk, but I'm typically going for a like once I make the trade, and let's say it is a 46.95. I have my calculator in my hand right now. So once the trade clicks off and I'm at 46.25, I usually put a 5% gain in there. So I'd be looking at going 48.56. And if this were to be successful on a 4 contract trade, that would be a 645 win. So so you have to come down to your risk of the risk reward type of stuff that Paul talks about quite an extent in a lot of his videos and so forth. So that's how I'm looking for a 50-ish delta if I'm looking at a 1 week out expiration. If I were going to play this today on the one expiring this week with only 1 day expiration, as you can see, the prices are much cheaper because there's not much time left. I would go all the way up into the 70 deltas. It's the decay of those are not as impactful, but again, the bid-ask price right now, that spread is too much. But if I were, and I recommend not doing that, you would want to go up into the mid to upper 70s, even 80 on the delta there. So, but I just personally would not even go in that direction. I would stick to Monday, Tuesday, Wednesday, going with the one expiring that week, and then Thursday, Friday, go to the next week out, and so forth. So that is, and then I'll just capture the price that the contract opens at, and then I'll typically, now the manager's out there, so, but I have not had an opportunity. The manager's not available on Thinkorswim yet, and I do all my trading there. I do some setup trading and analysis on TradingView, but I have not. I want to try the manager with a Thinkorswim based trade, but using TradingView to manage a trade without putting, like I might go out and put a 12% gain versus my typical 5%. And I usually go either 3 or 5%. Let me go back to the chart. I'll typically, I typically look at, let me go back to this one here. Let me find a, if that's all I can pull in there. So I'll go back over here. What I'll do is I'll look at the difference. Did it stay there? Okay. So this is the zone that the software believes that will be the wave 5 zone. Again, you have to kind of go back if you're not familiar with the Fibonacci and the Elliott wave type stuff. The further wave 4 is up in this zone, the less probability that it will hit this. And as Paul says, if it goes out here, a wave 4 develops out here, that's kind of like rolling the dice. And I do not trade anything that falls outside of the zone. I don't even like, quite honestly, trading anything in the red zone. I try to stick in the green and yellow. That's part of my prescriptive behavior as well. I predominantly look for green and yellow setups. But as far as my percentage, if you see here, I just eyeball the difference between the wave 3, 32.21, and 32.19. That if it does hit that, that's probably, just from my experience, about a 3% gain in the options on Amazon. So I will go either 3% or 5%. The closer the wave 3 is to the wave 5 printout, I'll stick with the 3%. If it's further down, if this blue area was further down here, I would go with 5. My plan is, and this is just not my plan starting next week, is to try to use the manager from TradingView, and I'll be looking at it on 2 different screens. And I want to try watching that go, because the other things that I watch is, like I said, is the divergence cloud. So if the trade I put on occurs and the divergence cloud is red, and on the manager, you can see this red zone. It's a little bit hard because I have a lot of stuff on here right now, but the red zone, that's still being congruent with my trade direction. And then I will also continue to look at the yellow dots in that particular direction. And if they are working, I think what my plan will be is to put my stops for my first trial at 10% instead of 3 or 5, and see how the manager works on driving trades, especially in these parabolic trades, as you'll see here. I don't want to lose out on, not that I'm greedy, and 3 or 5% on an option trade is really good, but when you have a parabolic move like this, and if it continues going in that direction, and the manager is congruent with all that, I'm going to start using that moving forward. for my trade management and so forth. Damien, was there any questions so far from anybody? Did you see? No. Okay.
No, none at the moment. Sorry, I've just muted you. So guys, if you have any questions, please put them in the chat.
All right. What I'd like to talk about next is so there's also the swing trading, and I do swing trading, and that one's a little more. I mean, at some point in time, if you want to record stuff, this one's a little more. It's still using everything that I just went through, except I pretty much am looking at the weekly, the daily, and a 4-hour chart just to look for the congruency and so forth. The difference on what I do is on the swing trades is I don't buy the stocks. What I do instead is hypothetically, let me go. So if I was looking at Amazon, this is on the daily chart, and if the weekly and all pointed out everything, and we didn't have, let's say we didn't have this, let's say we're looking at this point in time here, which was about 3 weeks ago-ish. If we were sitting at that point, what I typically do rather than shorting that stock, again, you can't short a stock in a retirement account. So what I do instead is I do what's called, there's two strategies that I do. One's called vertical credit spreads. In particular, it's called a bull put spread or a bear call spread. I don't want to get into the mechanics of that right now. I can certainly do that if it's of interest, but I do vertical credit. So basically what I'm doing is I'm selling a put, but because it's an IRA, I protect myself, and it's allowed in IRAs by buying a put at a higher price. If I was doing the bear call, or I'm sorry, a call and a put. So depending on which direction you're going on, I'm selling a put to get the credit, and then buying a cheaper call to keep it risk averse. Like exactly what your risk, your maximum losses. I mean, you can't really have any problems with that. So so I do that, and the only thing that you have to look at is on a chart, other than what you see, is just to make sure that the current implied volatility is higher than the historical, and you don't want earnings coming up within the next 3 weeks, because that will drive implied volatility up, which will drive up the price of your stock or of your option that you sold, and then you end up being on the losing end. So I will do that. There's the bell. I will do that on a swing trade, and the other thing is what's called an iron condor, which is both a bull put and a bear call, but that's when your market's a little more non-directional. But I could talk about that later if that's something of any interest for this particular trading stream and so forth. But I use the same thing, same ideas. I'm looking for the false breakout, looking for the measurement on the zones here. You can see here the 140 and so 90 type stuff. So I do look for the zones to be set up right, and as well as the false breakout and all the other things that I mentioned before. I don't have the manager on here yet, so I don't have the volume and price action indicators on here. I do want to point out, though, I do use the XBRAT. Again, the more the things that measure out, like you see here, you're starting to get the divergence cloud moving up. You got the 6-star buy signal taken up here. You have a crab that is looking for it to be in this zone here. all of that is just bonus and gravy for my Elliott wave. So my Elliott wave is my starting point. But if these other patterns, the harmonics, the XBRAT, and the divergence cloud, if they all are matching up with what I'm saying, then I'm really all in on that trade, and we'll follow that up. So I'm not sure how many people. I think a lot of you probably use the XBRAT and the harmonics with the futures and so forth. And from what I on my demo accounts, that's been working really well as far as it, and as well as the Nadex. And the harmonics one, when I talked about Nadex, the harmonics one is really cool because it gives you that zone. And if I ever get the chance to show you the Nadex knockouts and credit spreads, which have zones in them, this thing sets up nicely for how Nadex works with some of their, they have trades that are 2-hour trades, 4-hour trades, and day-long trades and week-long trades. So depending on which one you're looking at, harmonics really works out well, as well as the XBRAT on doing Nadex-related trades too. So I'm going to jump over to the bell has rung, and like I said, I don't know if we'll have any trades in that I would take today, but I will drop over to seeing what's happening here. Okay, so I did, if we recall, about a half hour ago, I changed the count to the 390. That was back here. So that's, and I usually wait till after the bell, but that was a good move to begin with. I'm just trying to make some more room here. So this A was the low from yesterday, right at closing. So what I do here, you see the wave one has developed, and looking up at the top here, I do look at this too overall. Now, when you day trade, the bias is toward an up market right now. I will keep an eye on that because that's one other thing for the overall day. If things are bullish for the day or bearish, I will be a little cautious to make a bearish trade when things are looking bullish overall. So, but predominantly, I watch how things play out on the day trades. This one down over here, this breakout, that was yesterday afternoon, in the 3 o'clock to 3:30 hour. I will not take much consideration in that in my own prescriptive pattern, because we're in a brand new day, and that's why I reset this to see how things go. I mean, I will keep a look back, because that was a pretty lengthy period of time there, a 30-minute on a 1-minute chart. But right now we're looking like an up day in Amazon. And you can see here when I talked about a short, quick wave 2, wave 4 might from observance and what's in the bootcamp, could be a longer drawn out process, but we'll see what happens. So I'm going to jump back up to well, first of all, I do go over to, Trading View here. So this is my Trading View one as well. Looks pretty equal to what we're seeing right now in Thinkorswim. So we got a 1 and a 2 in play here.
Vic, we've had a question just asking how long have you been trading?
Trading, I've been with Paul's software. I've been trading for about 3 years. Overall, I've been trading since 1988. I actually started out trading. Futures, commodities, and stuff like that, but doing spread trades. But I did that starting out in '88. Again, most of my stuff has been in IRAs, and in 2008, I took a catastrophic hit to into my 401k plan, which was my company owned, and I could only make changes a certain time there. I took a huge hit when I moved stuff over to my company's 401k. Went from a couple $100,000 down to 60-some thousand, and had to start all over in that one. But overall, I've been trading. The only thing that I have not traded in my life is I guess treasury type of stuff. I don't really trade the interest market. That's the only thing I've traded. I've traded everything from live cattle to gold, silver, sugar, and oil, heating oil, so forth, pigs. I've traded all that stuff, and since I'm predominantly and I've traded mutual funds, ETFs, regular stock options. I've actually traded future options too, and if I do get into, if I do move some money at some point in time into a regular margin account, I do want to try using these tools, not just on futures, but on future options, similar to a stock option, just as an experiment, you know, an observation to see how that plays. A little more leverage on that as well, but it's very time restrictive. That's one of the big problems with options. Is the everything is time locked. You know, there's a time factor to it. Stocks and stuff like that. Futures have a time too, but they're usually much further out than a stock option if you're playing a day trading on a 1 week span there. So, but yeah, I did start trading back in 1988, I believe it was. And the fact that I'm still working goes to show you that until I started using the bundles here, the fact that I'm still working, my previous trading experience and patterns and so forth, I never had a combination of indicators and taught strategy that you know, has worked until I started using the bundles here, the Elliott Wave bundle or Elliott Wave suite and the day trading bundle and so forth. So things are much greener looking in the last year or so since I started doing that. I have to just convince my wife that I can do this full time, and I think I'll have a lot more fun rather than having to report to my boss and so forth. If you saw my background, I know Paul has a French bulldog. That was my border collie. My wife knows I'm doing this recording, so I think she just the border collie's been in here listening. So she's Sadie, that's her name. She's just on her way out the door. Any other questions? Okay, so back. Okay, so this is back to the 1 minute. So at this point, we're still holding. Some of these lines up here, I did not draw these in for those who have harmonics. They're the retracements for when the pattern completes over there. So, anyway, at this point, nothing new at the 1 minute mark. Trade views looks similar. I will go over to, I'm looking at the 3 minute. I'm just looking for total congruency across the charts. Let's see here. Okay, now this is the 12 minute one. And even though we're in up market, this is still showing a downtrend. So I will keep an eye on this. I technically at 9, since that says 9:30, what I've done in the past, I don't know if this is a good practice or not, and that's why I usually wait to go back to the 12 minute to see how things go. If this starts moving upwards on the 12 minute, I will go into the software here. I'll just do it now just for, so I look again at, I'm at 100. When you look down here, I'm at 100. So I will go here and change my 12 minute one to 100. It was at 99 already, but, and see if that has any change on anything at this moment. And I'm still now at the 12 minute mark. I'm not as excited about the upward swing just yet on Amazon. I see the on a 12 minute the breakout, the false breakout, still indicating it could go lower. I'm not seeing any new waves being generated just yet. You don't always get them generated in the morning, but I'm not seeing them being generated yet. So I'm cautious at this point with Amazon. And if you look up at the top here, the move is so tiny. It's only like 0.1% or less. You know, it's not a huge move. A $4 move in Amazon, considering the prices up here at 3,000, is pretty tiny. So right now, I'm sitting in a not trade mode because my 12-minute and the false breakout and so forth are not congruent with what I'm seeing, you know, in the 3 minutes and the 1 minute time frame at this point. So you have to be careful. And Paul has cautioned on the 1 minute time frame with equities in particular. You can see a 1 and a 2 developing here so far in the waves, but that could, based on the rules that are out there on what constitutes a wave 1, 2, 3, 4, and 5, you have to, when you're at the 1 minute time frame, those 1 and 2s could change to A's and B's and C, you know, A, B type patterns real quickly, or that 2, if it were to turn around and continue moving upward, that could become an extended 1 in some cases. You don't usually see it in the 1, 2s, but you can definitely see it in the 3, 4s and 5 waves more. So you do have to be careful, is that just because a 1 and 2 patterns forming right now does not mean 10 minutes from now that could look different. That's why I look at the higher time frames for congruency and so forth. I will pull up, I'm going to jump over to Trading View right now, and I'm going to see what Nvidia looks like right at the moment. Nvidia also has Nvidia also right now has it's on a downward swing. Let me, now this one would be more of interest at the moment. I want to go down, look at the other charts, but you can see that the stock itself is down quite a bit today, 0.7%. It has a very strong downside breakout, so that rubber band is going to pull this wave too. It should, if everything goes right. Like I said, I will look at the higher time frames, but between this and where we are currently in the market, it's a pretty big change. This too will probably go, you know, turn around and drop down to a lower time frame. And even looking at, and feel free, anybody to jump in, Paul, Damien, even the manager right now, when you're looking at the bars here, and I'm not an expert yet at this right now, is not really confirming a strong upward momentum at this point. We still have the divergence cloud downwards. So Nvidia looks like it could be a possible setup for a trade if we get into once the wave forward develops. I just don't know when that will develop yet. I'm going to drop down and look at the 12-minute chart. So over here. Okay. Now the 12-minute chart. Well, I didn't reset the counters, the bar counts on this yet. This is not congruent with the 1 minute, but this is also not congruent with the price data. So I'd have to go in and change the bar, look at the bar count on here, but I'm just showing you my process first. And then, like I said, I would drop down to the 5 minute. Okay. Yeah, I think I have to drop down and change. Oh, the one thing that I don't have on this chart here is the extended hours. So this one's picking up. For the day trading, the recommendation that I got was to where is it? Turn off the extended hours when you're day trading, at least for the equities. So I've turned that off. So now we're back to yesterday's numbers. So what I'm going to do is, since we're in a down market, I'm going to look at this. That's at 9:30. So I want to take that bar count. This is what I do anyway. And so I go to my indicators, add the bar number on there, and then you can see the bar number here. I'm going to go over to this 9:30 number and 10063. I'll go back up to my Elliott wave, 10063. Go to the settings and change this to 10063. Hit OK. Then I get rid of the bar count and collapse that back up. So now you have a 1 down here. So now this is looking congruent at this point in time. Divergence cloud looks like it's mapping up and so forth. I don't have a like a breakout bar or breakouts way down here. So that's not relevant. So I'm not seeing on the 1 minute time, I did see a very strong downward breakout possible. Here it's not there. But that doesn't necessarily mean anything at this point in time. If it was there, if it was somewhere in the zone, it would even be a strong reason. So let me go to the 12 minute, back to the 12 minute here. So what I want to do is, this is also 9:30. I want to get that bar count there. And right here, that was 10160. Okay, don't need that anywhere. Okay. So we don't have a bar count yet at this point in time. We do have the divergence and the EMA, like the slope on the EMA starting to head down. So the 12 minute is slightly congruent with what we're seeing at the 5 and at the 1 minute on the Nvidia. So cautious at this point, cautiously optimistic that the 1 minute time frame will potentially produce a trade if it continues moving that direction. So, but right now we're not even at a wave 3 and 4 setup. One of the things that I also look at when I place the trade, let me try to see if I can find a wave 3. I don't think I have a wave 3 in this one. One of the things I do is, going back to Paul's rules and observations and for Elliott wave, let's pretend that this A here was a wave 3. I will measure from the 2 to the 3. And when I get into a trade, now I'm going to bounce back over to TradeView. So if I'm up in the So if the wave 3 had resulted in like let's say a $20 move, the wave 5 is not going to exceed that. So depending where the wave 4 is and the wave 5 chart is there, that will be come into play too. It's not a rock solid one, but I do know that I will pay attention to the length of the wave 3, and then when the wave 4 is developed, I will subtract or add, depending which direction the trade's going, the amount that wave 3 would have been, and know that wave 5, if it's going to remain a wave 5, won't be any longer than that. So I will look at some things like that. But all these tools that you see in here, between the big bar here on the 1 minute, the divergence cloud, EMA cloud dropping, everything dropping, is that this should be a good trade. It's continuing to hold at the moment. Should be a good trade once the zone is set up here from the wave 3 and 4. I hope this isn't going to be a boring trade. Let me look at, so this is a possibility here, but pulling no triggers just yet. I will not trade. Again, if the XBRAT pops up a 5 or 6 star sell, that just adds to my overall confidence of the trade I'm going to pull. But I need, it's my own personal prescriptive strategy is I wait for the wave 4 to be created, and I honestly only trade the fifth wave. You could say that someone, I won't do it, but maybe a wave 3 is forming here on the downside, but it's too risky for me, so I will only trade the fifth. So from this trading stream room here, it could be a little boring at this point because there's nothing formulated. I will go look at Tesla now to see what Tesla's looking like. Tesla 2.
To be honest, mate, I mean, I think Vic, we had a chat yesterday about this, and look, there may be a trade, there may not be a trade, and I think that the thing is, as much as everything else, it's about discipline as well. It's making sure that you don't just get into a trade for the sake of it, in the sense of, well, you're in front of the markets, I might as well get into a trade here, or I'll take a punt here. That's gambling. And the whole point of trading, and if you really want to take the true essence of trading, and that is more about waiting for the right setups, for high probability setups. That's the two biggest words you could ever use in trading: high probability. Right. And at the end of the day, if there's a setup and there's a trade, fantastic. I think what's great about this is that we're able to just see something different, because obviously our trade room has been focused on futures trading and trading the market open and obviously the close later on as well with Mike. But to be honest, to see an alternative way in which to, like you said, it's wealth building as opposed to actually trading. And you could do this for a living. It's just obviously your wife has clearly expensive taste. You could blame her.
Well, here's the proof in the pudding. Proof in the pudding. There, you can certainly do it. And even for this week, three trades generated 1641 is nothing to sneeze about.
Come on, yeah. I mean, seriously, yeah. If you were to turn around to yourself and say, look, here you go, here it is, you won't turn your nose up at it. And that's I suppose what I'm trying to press on these trade rooms, that we want people to understand that it's not just a case of jumping in, watching, and we're just going to take loads of trades, and it's just going to be a wild buckaroo ride for the rest of the day. If there's nothing there, there's nothing there. But it's great to be able to see your process in how you look for specific trades, because, like I said, there are different ways of trading the markets. And like I said, we've been focusing on the XBRAT and day trading bundle. It's great to see someone using something like the Elliott Wave, which was our first product, and how you're using it to trade the markets in a completely different way. And it's just great to see it. And I just wanted to butt in with that one, mate. Sorry.
That's been my message, is that, like I said, it's my mantra is, trade a prescriptive process. You've laid it all out. You have the Elliott Wave suite, and then which I strongly recommend. It works in every market that I've looked at, even though I can't trade those markets. It's worked. I think I have. I pulled up a oil, and I see in this room that they trade oil. So here's even in oil, I can't trade it, but this was I calculated it yesterday. Let me see if I can find it. So I calculated the entry point on that crude oil, and then the exit that I took on it on just one contract was $1,560. So the Elliott Wave is my bread and butter, and then the XBRAT, the divergence cloud, and the harmonics. Really, I love the harmonics because, quite honestly, what the harmonics do sometimes. Okay, here's a good example in the crude oil thing here. So I have the wave 4 and down here, and I'm waiting, and then as I'm going, it's just drifting. Then the harmonics came, and I'm like, oh, this is a pretty good. It's not hitting the 5, but at least it's, to me, showing that I'm going in the right direction with it. So,
Exactly.
you know, and then eventually, if you stuck with it, it continues and continues. This was a huge win.
Is that a 4-hour time frame?
That's a 4-hour on crude.
Christ, that is a long time.
Yeah, long time, but a pretty good profit size. It was like 58.73 all the way up to 72.27 if I stayed with it. So if that's 58.73 and 72.27. I'm just on one contract. 13,000. That kind of matches your trade the other day, the 13,000 one.
Cool. I mean, to be honest, I mean, at that point there, I mean, you can see it's obviously it was coming back and retracing into the pullback zones, and I suppose that's the epitome of patience there, in the sense of you really got to have trust in your system and the tools you're using, because you can see. I mean, look, that literally that pullback there just to the left of your chart, that's 1, 2, 3, 4, 5, 6. That's nearly a whole day just in a pullback.
Right.
And then obviously it goes back up over the next few days. But it's again that case of, oh Christ, what's going on now? It is relaying that trust in what you're doing.
Right.
Which is really quite cool. And to be honest, the Elliott Wave was our first product. It was the core product that Paul first learnt. And I think as much as anything else, it's one of our only products that actually comes as a full strategy. So you have the false breakout stochastic, you have the oscillator, you have the Elliott Wave, and the idea is that you're waiting for all the stars to align before you get into a trade, and that's all based out of one indicator itself. But it is great to be able to see. I mean, for swing trading, it's so powerful. It's unbelievable when you really deploy it properly for swing trading.
Yep, and I also like your the original dot.
The dot cloud.
Yeah, I mean, I still use the bias indicator in TradingView, but in TOS I have the new bias, but I really kind of like the old one. It does have. I use them both. Yeah, I use them both, but it does help me identify in these smaller time frames what might be breaking down a trade and stuff like that. So, but
when I first started working for Paul came over to Cork to visit me, and we were actually working on the name for bits at that time, because obviously that's what, you know, bits and bias replaced dot cloud and the breakout cloud, and we were working on that name. So that's 2 years, you know, since we've removed it. But obviously, you know, at the end of the day, it's what works for you and how it works for you, and clearly it's obviously doing something right if you're managing to remain in profit.
Yep, there it is. There's your bits right there.
Yeah. So yeah, jump into something like Tesla, and just how, you know,
Tesla,
your process there, and how, and because you mentioned that you said that obviously stick to a small number of stocks. What would you say would be the optimum number of stocks to properly have in terms of your portfolio to be studying before it gets to a point where you're going to lose yourself in all the numbers?
I would say 5.
Okay.
And the only reason I say that is you get really familiar. Like, I've become pretty familiar with Amazon, and you know, you can look at 400 stocks, and I don't care what Amazon is. Like, if you know, like, because it's all technical and stuff like that. So I don't care if they make baby diapers or create car. You know, it doesn't matter as long as it falls in there. But I just like sticking to a small amount, and I've showed you my 2 days of just trading Amazon can result in. So you just kind of get familiar. It's the reason that when you go down to some of the smaller stocks, even Piton, you get into a situation if I go to, let me go out to the.
Is it better to stick with the more established kind of stocks like the Teslas, the FANG, the Facebook, Amazon, Apple, Netflix, and Google? Or is it better to go with more up-and-comers or smaller stocks?
The up-and-comers I'll do with swing trading with the verticals as long as they have options to trade. But even with Piton moves around quite a bit, but the thing that gets in here is like when you see, it all depends, well, okay, take it. Piton, I like trading, and it's really good for people who are trading much smaller accounts. Like Amazon, you can make one of those trades, but I told you it's going to cost you between $2,500 and $5,000, depending where the option is at the time. As you can see here, these are much smaller at $5 and so forth. The only thing that's where the open interest really comes into play, because let's say we're going to take this one that's right here, this one here. If it only has 90 open interest, for me to get to a level, what I'd have to trade like 15 to 20 contracts, and 15 to 20 contracts on that small volume. It just that's why you have to be really careful on the open interest and stuff, and what the price, because and the lower you drop, that's outside of my delta range. But if that was a 50, it had good open interest, but to equal one Amazon contract, I'd have to trade like 25 of those. So when the options are moving, depending where the theta decay is, you might buy 25, but you might not be able to get out of them. You might not even be able to buy them all. Like it might take a period of time to even get all 25 filled. And then on the worst side is getting out of the 25. So that's why I like the real high volume guys like Amazon, Nvidia, Tesla. You can certainly pick any one of those three. You could stick with Amazon, and as long as you didn't care that you made a trade that day, but you knew the next day you could have a pretty good, if you have a good trade, like I've shown you, you can stick with even one. But I myself, it's just my personal preference, don't go more than 5. I look at, let me go back over. I look at Amazon. I look at Nvidia. I look at Piton.
Yeah.
I look at Tesla, and then and Zoom. Now.
Well, I mean, Zoom's probably the thing to be looking at, especially for the last 2 years.
Yeah, here's Zoom right now on the 1 minute. Nothing's generated there, but wait a minute. No. There's 2. Okay, so we're on a down on, which makes sense here based on what I'm seeing. We got a little break, the downward break. So, but yeah, I stick to those 5 mostly, not to get, because I don't want to get over inundated with analysis. Looking at the ones out there, number 1 and number 2, I get really comfortable and very familiar with certain actions. I mean,
it's a bit like it's price action, isn't it? At the end of the day,
yeah,
it's reading the price action, and it's a bit like learning a language. You could pick Spanish or German or French, and you could maybe pick 2 of them and try and learn them. But if you try and learn 7 or 8 languages competently at the same time, you're going to get lost and you're going to get confused. Whereas if you have a smaller number, you just get to learn its characteristics. Yep.
The other thing too is there's 2 things. The first one's going to sound kind of crazy. Don't ever trade Amazon options over the lunch hour, the Eastern Standard Time lunch hour. It just
okay.
That was my problem yesterday. I left for what was supposed to be a lunch meeting. I was going to get lunch, but it turned into a long conversation with my manager. And my trade that I started, that I showed you, let me go back to that one on the paper yesterday. This was yesterday. I put the trade on at 11 o'clock, but you saw, unlike previous ones, you'll never see me do this, but it hit the lunch hour. I would have been normally out of there, but I got that phone call and got distracted. I still made 555 on it. But when you look at the chart, where'd it go? When you look through, let me go back to Is that it? Yeah, when looked at the chart, I got, I'm not sure if this is the right one, but anyway, what ended up happening is that, no, it definitely wasn't this one. But when I went to the chart, if I could find it, it wasn't that one. No, I'll have to find it. But when you look back at it, it was very, I was actually down about 1,000 through the lunch hour. There was very little movement. It was mostly sideways movement, and that's where that time decay comes in and so forth. It did after 1 o'clock. It did then drift down into the direction that everything set up for. So it did turn out to be fortunate. But the one thing I learned, like I said, is not to buy through the lunch hour with Amazon anyway. So and then the other thing, like I said, don't trade after 3 o'clock. You just learn things just by looking at the price action, etc., of the different stocks that are out there.
So guys, look, we've got Vic here for about another 15, 20 minutes roughly, guys. So look, if you have any questions, jump in with the questions now. Like I said, it's valuable stuff. This is new stuff that we don't know. And it's great to just learn and understand how people are using different products in different ways of trading. So look, if you have any questions, put them into the comment box, and I'll mention them to Vic. But yeah, Vic, I mean, if you want to carry on and yeah, go through test.
I was going to say if we could if it's worth it, like on the swing trades with the credit spreads and so forth, it's hard to explain it without showing it. And I don't want to get overly complicated. Most of it's pretty much the same, except the one thing, like I said, you have to look at is you want to make sure that the current implied volatility is higher than historic. And that would be the only thing that you would have to add if you were going to go in that swing direction. I don't make that many swing trades. I have I have it here. I'm ducking out of view here for a second.
All right.
Here's all my observations and rules that from all the boot camps and stuff like that. I got pages of stuff that I've taken from all those rules and have it at my fingertips, real quick and easy.
Look, if it was that easy, everybody would be doing it.
But here's if we had to, this is what my little flow chart for credit spreads and stuff. So it's a little bit difficult. I'd have to put this up on the screen for people to see better, but I do have.
Let me enlarge it. Let me enlarge it on the screen. There we go. Come on, put it back up to the screen now.
You want this one?
Sorry, put it up to the camera.
Oh,
just a little bit higher. There you go. That's cool. Thank you.
So that basically tells how I do the bull put spreads, the bear calls, and stuff.
It's your trade plan, basically.
Yeah, and I didn't make that up myself. I mean, I did learn that. Prior to Elliott Wave, I've looked at other classes and other courses and stuff like that. So I can't take credit for that particular thing, but it is a strategy that works out pretty well. I'll have to caution that depending on what the volatility, like the past 4 years, the market was whipsawing all over the place. Credit spreads on a swing trade were not as profitable. As you have to kind of be really careful on the volatility part and stuff like that. If things are like not whipsawing all over the place, it's pretty good. Like right now, I wouldn't be adverse because the VIX, if you look at the VIX, I think it's down in the mid-teens right now. I look at my, let me see here real quick. I do look at the VIX. You can see the VIX right there. That's actually pretty high, 21.81, if you can see that. But when the VIX is down in the mid-teens, the credit spread is a safer bet. When it's over 20, like it is now, I wouldn't do any credit spreads myself. but that's just another prescriptive strategy, as why not to get into a trade. And that's been something that Paul and Damien, the courses that are out there, the mantra is, look for reasons not to place the trade, be patient. I think that you have to have three really good from a psychological perspective, three really good characteristics. One, be calm. And by that, I just mean the trust in what you've learned. Nothing's 100% perfect, but with all the strategies and so forth out there, if you set things up properly, you could be in good shape and stuff like that. So, be calm. The other one is be patient. Because sometimes things will take, like, especially when the wave fours, kind of stray out a little bit, you want to kind of be patient. And then from a psychological perspective, the last one is patience, be calm, and what's my other one? I have a third one. Now, I think I'm a little movie shy here being on the screen, but right. I know what it is. Just kind of clear your mind of all the clutter around you. Just trust, it becomes part of the calmness and patience, but just try to, when you're trading, try to trade. Like if I'm working and so forth, I don't want to be trading in the middle of a work meeting because things are distracting and stuff like that. So I'm not going to sit there and place a trade while my boss is talking to me or something like that. That's not a clear mind, and that falls in. Even if you see something set up and it looks really, really good, that just doesn't fit, because you're kind of rushing to make a trade work for you rather than let it come to you and so forth. So you kind of have to be calm, patient, have a clear mind when you're making the trade. All the rest of it is, I think I've pretty much touched on all the various things that those tools have allowed me to set up for my strategy. And it's not that I haven't had any losing trades, but like I said, I had 4 or 5 months there with a 90+ win rate and so forth. Some of them were small wins. Might be I have to honestly say, not counting losses, my small wins are usually over $200 or $300 in that small time frame. I've had some wins that are over 1,000 to 1,500, but most of them are. It's not like I haven't had any trades where my win was like $80 or something like that. So if you thought it's nothing wrong with an $80 win type of stuff in a minute, especially in a minute. But if you're not pushing for the trades, a $240 in one morning, that's nothing to sneeze at, like I said. So, but there are big ones, like we looked at that oil one. That was a pretty big win there. Even not the 13,000 one, but the other one I showed, it was 1,560. That was in a couple hours, so that's not too bad and everything. So, anybody else have any other questions?
Okay, I think it's all gone quiet. So look, look, thanks, Vic. I mean, it's really fascinating, and it's great to just get a different perspective, like I said, because everyone has a different way of trading. Everyone has a different way of doing things, and like I said, we have been focusing on the trade room with futures, and obviously we will continue to do so. It's great to just get you on, and we'll probably bring you on again. Now that the first night nerves are done. And obviously, I've managed to fix the echo on the stream, so I can actually talk to you, and we can kind of have more of a conversation during this stuff. But it's just great to get someone with a different point of view, and we'll bring you on. Like I said, it's not always going to be trades every day, but perhaps what we'll do is we'll catch up again in a day or two time. When when you're seeing something lining up within a swing trade and stuff, then we can try and bring you on then, so we can kind of go through where you are with an open of a trade, or where you go, what you're happening, and what you're looking for with the close of a trade. So it would be great on that side of things. But look, guys, if you have any other questions for Vic, send an email to myself, Damien@globaltradingsoftware.com, and then I'll relay it out to Vic, and then obviously we'll answer them back as quickly as possible. But yeah, no, look, thanks very much for your time, mate. I really do.
You're welcome. Like I
it.
said, if you ever want to just put, if you ever want to just put together a on how to execute, since we couldn't execute one today, execute any of those credit spreads or execute the day trade on the Amazon or something like that, I can very prescriptively go through. I think I went through pretty well today, but we didn't get to execute one yet. But we can certainly put a little extra one, a bonus slide or something like that, if that makes it work better.
Well, exactly, and we can look at trying to put a video together or something that when you do go to do it, we can get a screen record on that for you as well. But okay, perfect, mate. Well, look, thanks very much, guys. Look, we'll be back again later on today, back with Mike. We will be back at 2 p.m. Eastern time. So, and we'll be back trading the futures for later this afternoon in the US markets. So, guys, please come back, join us, get back in the conversation and stuff. And Vic, thanks very much for your time, mate. Really do appreciate it. I'm going to close everything down now.
Oh, you're welcome. Have a good time.
Thank you very much. Really, really good. And we'll have you again on soon.